Lines have been drawn in between China and the US. Those who are paying attention have realized this. In today's video, I'm going to explain number one, the battle that's taken place. I'm going to show you some information that you must know as an investor, but just as a person concerned about what happens geopolitical here. The second thing I need to look at is the difference, the imports, the exports, the data itself. I'll show you that really quickly. The third thing is China's economy. I'm going to explain what's been going on, the concerns that are there today, and I want to show you this real easy, real simple. I'll break it down all for you. You don't want to miss it. Let's begin. This is so important. In this article, they talk about the US-China rivalry may shape 2023 for the world. Why? Well, they get into three basic things, and that is Europe. They look at emerging markets, and then China's reopening. These are all so important, not just as an investor, but people who are looking at the world and trying to figure out what could potentially happen next. You might be blindsided by all this if you're not paying attention. The great competition between the US and China, which only intensified in 2022, will likely be the most important theme of the coming decades. That's so key. Like many people are saying, nah, nothing's going to happen. It's going to be always the same. But if we look at the buildup into this point here, we see that, in fact, the tensions are heated more now than ever before. I'll give you some examples of that today. Stick with me. With that in mind, we look ahead to 2023 by focusing on three important dynamics underlying the rivalry. Two relate to where the rest of the world positions itself in the field, and the third analyzes where China itself is headed after a year of weak economic growth. So, as they talk about here, Europe is the one where China has really tried to position itself as being, favor. We can do business with you. Let's make this happen. Let's be partners together. And that's what Europe is trying to really, they're in the middle here, especially when you look at what's happening with Russia and Ukraine. Europe is siding with Ukraine, but at the same time, you see Russia and China. Russia's kind of pressuring China to, hey, let's be friendly in this case, and China's trying to be neutral in this regard, but I think that there is an issue with that because they don't want to be unfriendly to other economies, particularly in Europe. Okay, then we have emerging markets. China is heavily invested in emerging markets. They are very clearly siding with China in many ways. We look at the deals that have been taking place. Look at what's going on in Africa. China is all over the place doing deals, investing, and of course expanding. Then we have the reopening. They reopened and now they're suggesting, at least the media is, that this was such a big mistake. This is terrible. I can't believe they did this. And as a result, are they going to head into lockdowns again? The New Year's coming up, and so they're in a time period will they be shut down regardless. Nothing will be happening for a few weeks. So that gives them a period in which hopefully everything calms down and then they could return back to it. The growth needs to be there after this. This is very important. They need a lot of exports. They need it to happen. And how do you do that? You need the workers, you need the manufacturing, and you need to be sending that stuff out overseas. So these three things are huge for China as well as the US in their tensions, their relationship, and we'll see what happens in these coming years. We need to discuss the difference. What's going on? What is the difference? Well, that blue line, that's China's GDP as of 2021, 17.73 trillion. You might not be able to see it. There's a lighter green line there. That's the United States, 23 trillion USD. Now, comparing the two, you could see that the United States is still higher. Japan, down below at almost 5 trillion USD. So the difference here is that China's GDP is accelerating rapidly. Now, we can point to some obvious facts that when you have 65 million empty homes, you're able to generate more GDP. But is it really part of a strong economy? Like if you're essentially printing money to get the economy going, does that count? Well, that's up to you to decide. But I just want to show you that, comparing the GDP. This chart here shows us US with China, total trade in goods. Green lines are exports, yellow is imports. And let's focus on that for a second here. You can see for yourself the differences. This is important, that we are looking at countries that have demand for each other's goods. China wants soybeans from the United States, just like the United States wants basically everything from China. And they are good partners in this way. However, if there's war, that's going to be hard. That's going to be a different story. Everything may not be necessarily, raw materials. Look at semiconductors. You might have a company like TSMC, a Taiwanese company, but they might be doing their assembly inside of China. So even if you're not dealing with China directly, you might be doing so indirectly. What about the refining of certain products? That might take place in China as well. Okay? And then the deficits is just the red. So you can see in this case here, constantly, the US in particular runs massive, massive deficits. It's allowed to do this or capable of doing so because of the US dollar monopoly that it has. This is very important. If the whole world is willing to buy up their debt, then they can continue this nonsense for a very long period of time until they can't. So let me show you this here. If it plays, you could see this Chinese jet coming dangerously close to US plane. Look how close that is. And what are they trying to do? Well, they're trying to send the signal. They're saying, we are going to do what you do. We're going to get in your backyard. We're going to get in your face. We're going to be all around you if you're going to be around us. These countries do this to each other all the time. But it shows you how close we are. One trigger going off, and that's it. This could be devastating for the whole world. And yet, things like this seemingly happening all the time. That directly connects in with, remember, Nancy Pelosi going to Taiwan. China was saying over and over again, do not go to Taiwan, you're going to regret it. Do not go to Taiwan. And what did they do after? Well, she went and they started encircling the entire Taiwan afterwards, making a very clear threat. Like, if you do this, you're going to be in big trouble. They did that anyway. Tensions have been very high ever since. Nothing happened. We didn't go to war at that period of time, but you could see that this is not very, it's not a good sign for 2023 in this way. Taiwan poised to roll out a $12.4 billion boost to the economy. So Taiwan is spending a lot of money in this way. They're doing so on their military. They're doing so from other places as well. The United States is trying to help out in what they believe is their own national security. And this is, something that China says, hey, don't do that. So, each side is always sticking their nose into each other's businesses, and they say it's for our national security, it's for our alliances, it's for, we're trying to help ourselves out. And so this creates even more tension on top of it. It's all piling up. China's home sales slump persists in December amid more people locking down, staying home. That's not there. The reopening is so important. I discussed that at the beginning. You're here now, and this is really key to realize. If you don't stick with me through videos, you miss these important anecdotes, okay? So this is something that we need to be paying attention to, as well as what's going on with Europe, Ukraine, and so on. If we're an investor, we look at this. We have to realize this and understand, where is this going to be in the next little while? Like, really, where are we going to be? China is losing its place as the center of the world's supply chains. You can look at that and try to make sense of what they're explaining in Business Insider. But essentially what they're saying is India, Vietnam, Thailand, Malaysia, and Bangladesh are stepping up to replace the world's factory. Yes, to some degree. If you're looking at textiles, you can get that in Bangladesh. Absolutely. India, maybe. Yeah, sure. If you got leather products or wood products, you can get that. And steel, I believe, in India. But if you want to compete with China, the country is physically, like, if you look at it on a map, it's structured in such a way where entire cities will be designed. For instance, this one city does electronics. This one city does wood products. This one city does plastic products. The entire city is built this way to be a factory, so stuff can move in and out appropriately as they see fit. It's just unbelievable. The logistics are designed in a way to be more functional, to be the world's machine. So if you're gonna open factories here and there on a small scale, sure, you can do it, but to compete with what China has set up is extremely, extremely difficult. It's extremely difficult. Yeah, they can put tariffs and so on to make things happen, but it's not so black and white like that, okay? Looking at this, China's GDP estimate shows economy grew at least 4.4% in 2022 at a time in which many countries did not do well at all. So I don't know what to take from these GDP stats or the US's GDP stats anyway, but it just shows us that there had been some growth because, in my opinion, there was stimulus. Stimulus going through at a time in which other countries were pulling back on it. This is really important to understand. If China and the United States were to experience increased geopolitical tensions, it could have significant implications for trade and the global economy. These two countries are major trading partners, and any disruption in their trade relationship could have a negative impact on both countries and potentially other countries as well. One potential outcome of increased tensions between China and the United States is the implementation of trade barriers or tariffs. These measures could lead to higher costs for imported goods and could make domestic products more competitive. However, they could also lead to higher prices for consumers and businesses and potentially lead to a decrease in global trade. Geopolitical tensions could also lead to increased uncertainty and volatility in financial markets, as investors may become more hesitant to invest in companies or countries that are perceived as riskier due to the tensions. This could lead to a decrease in stock values and potentially a slowing of economic growth. Additionally, if tensions between China and the United States were to escalate, it could potentially lead to a military conflict, which could have severe consequences for both countries and the global economy. We need to realize how severe this is, how serious this is between these two countries. Also, as investors, we need to pay attention. Look, I told you before that if you look at Tencent, Alibaba, all these other tech companies, they got punished because of the regulations, because they said, no, you cannot have your stock listed on exchanges that are in the United States, for instance. We're going to put pressure. We're going to do this. All of these things together are all adding up right now. We need to see how they had these political ties. How do you do that? How do you pay attention to all that? Well, I do it on this channel. So all you got to do is hit subscribe, because each and every day I cover these topics that give you the insight you need to know. Teach a man to fish, they say, and that's what I do here on this channel. I hope you appreciate it. All you got to do is hit that subscribe button down below. It's right next to the like button, and I'll see you tomorrow. Take care.